Market news now. Investors are clinging on to hopes that China will relax its strict pandemic curbs even after the government reaffirmed its commitment to the zero-COVID policy. The policy has weighed on China's economic activity, with yesterday's downbeat trade data providing the latest sign that the world's second largest economy is slowing. There is a focus on midterm elections that will determine control of Congress. Meanwhile, locally, Mall of Africa owner Attack will list on the A2X next week, while retaining its primary listing on the Johannesburg Stock Exchange. Its shares will be available on the alternative exchange from November 16th, bringing the total number of companies on the A2X to 89. To give us more perspective, we're joined by Martin Smith, who is from Anchor Capital. Martin, thank you so much for your time. What's your sense of the markets right now, given everything we've seen, including the jobs data on Friday?
I think we're in a little bit of a period of consolidation. We obviously had quite a big move on Friday, and I think the markets of the last day or so are just waiting and seeing how things pan out this week. I think the big thing is that CPI number out of the US on Thursday. I think that's going to be a big kind of determinant of where markets go in the next couple of weeks, and specifically this week. And like you mentioned as well, the news around China and will they reopen, will they not, I think will also be quite a big potential catalyst for markets in the coming days and weeks.
Any company news that caught your attention?
Been quite a quiet day on the market today. There was a bit of an announcement out of Murray and Roberts, but in general, a little bit quiet at the moment. And again, I feel like the entire market is just holding its breath for Thursday, because again, that's going to be such a big part of where the market kind of ends for the year.
Speaking of markets, you've got traders looking ahead to the midterm elections. What does a Republican victory mean for the markets?
I think it means that Biden is in a bit of a difficult position, because to try to get policies passed is going to be quite difficult if you've got a bit of a split from that perspective. So they end up in a little bit of a no man's land, and to make political progress insofar as passing laws and policies and those things is a bit difficult. So again, a bit of a no man's land situation if that's the outcome from today.
We haven't spoken about this in quite some time, and the question has always been whether we still believe that the Fed is still capable of engineering a soft landing. Do you still believe that, or have levels of doubt crept into your equation?
I think the possibility of a soft landing is getting smaller and smaller. When you look at history and you see the Fed hiking into kind of restrictive territory, it pretty much always ends up in it being a hard landing. Only a couple times it ended up in a soft landing. So probability is very much skewed towards a recession. I think the key thing to ask then is, how deep is that recession and how long does it last? Because obviously all recessions are kind of made the same. So that's another thing to look at. But insofar as it's the probability, it's very much skewed towards us going into a recession. And a lot of asset prices are pricing that in at the moment.
In terms of earnings stateside, let's stay stateside for a bit. I mean, what has been your sense of earnings season so far, given all the company announcements and some of the preparations and guidance ahead of a possible recession?
So far, I mean, we've had pretty decent numbers coming out of the States. You have seen some companies like Meta who haven't kind of moved with the times insofar as looking towards a recession by cutting jobs and things like that, getting hit quite hard on the downside. So I think people are kind of gearing themselves, or companies are gearing themselves up for a recession, but on the whole, nothing kind of sounding the alarm bells at the moment. So far we're okay, but again, there's still so many overhangs in the market, whether it be China, Taiwan, opening up of COVID, the zero COVID policy over there. You've also got interest rates, recession. There's just a lot of things going on at the moment. And we're so data sensitive at the moment and news flow sensitive. So I think it's just going to be kind of one data point or news print at a time. And again, the whole market's waiting with bated breath to see what happens on Thursday.
Speaking of what happens locally, we still have some companies that are yet to publish their own earnings. Any earnings that you're keeping an eye on, and why?
I think we're going into a little bit of a quiet period now insofar as South African earnings. But the thing that's probably I'm going to keep my eye on the most, it'll come out only in January, but we're going into that period now, is you saw the retailers publish results in the last few weeks and months, and they mentioned that they are a bit nervous going into the festive season and that you might find a constrained consumer. So it's going to be interesting to see how that pans out and what numbers we get in January when they update the market on the festive season, because that paints a very detailed picture of what South Africa looks like.
Martin, I'm going to pause you there. Unfortunately, we have run out of time, but it's definitely a conversation we can leave for another day. That is Martin Smith from Anchor Capital.